Hey, what's up guys, it's France here. Welcome back to the channel. In this video, we're going to talk about a strategy that I just came up with called the implied crypto short using Celsius network loans. Now, for those of you that have been investing for many years now, you guys know what a regular short is. If you're going to short a market, that means that you think that the market's going to go down. You're going to long a market if you think that the market's going to go up. But the beautiful thing about this strategy is it is a tax strategy, meaning you'll essentially use this strategy to prevent paying high taxes. And if you live in countries like, let's say, Australia, New Zealand, the United States, Canada that have really high tax rates, then the implied crypto short strategy might actually benefit you. Now, before we get started, I definitely want to remind everyone that this is not financial advice. Do your own research before implementing my strategy. And also, I would definitely appreciate it if you guys give me a thumbs up below. It really helps with the YouTube algorithm. Subscribe to my channel if you haven't already. We're almost at 8,000 subscribers, and hit the notification bell so you get notified when I post my next video. All right, let's get started with the video. Okay, so first things first, Celsius shorting, key points to consider. So let's start off with tax rates. So again, these are just tax rates of major English speaking countries. Again, many of my subscribers are English speaking based. So these are the major English speaking countries. Again, if I missed your country, I do apologize. But essentially, the main variable with the implied crypto short is going to be tax rate. So let's just say in the US, you might get taxed between 25 and 37%. Canada up to 50%. That is really brutal. UK up to 28%. Australia up to 30%, New Zealand up to 39%, and my country, the Philippines, up to 15%. Again, I'm not a tax CPA. Definitely consult your tax CPA before making any major moves. Again, other key points to consider in my calculations are going to be available collateral. So basically what that means is I would not use 100% of your portfolio to use this strategy. Meaning, let's say your ending portfolio at the bull market cycle peak sometime next year is $1 million. I'm not going to take out loan using my $1 million portfolio. I'm at the very most, I'll probably use 50% of that. So if your portfolio by next year is $1 million, at the most, I would pledge 500,000, half of that, just in case. Okay, so definitely keep that in mind. Again, jurisdiction is also a key point, meaning if you live in states that don't have the capabilities for loans, then you're not even able to take out loans. If you live in countries that don't have the capabilities to take out loans, then you're not able to do this. So definitely keep that in mind. And also, I would definitely not do this if you live in a jurisdiction that does not have all three products, meaning Celsius loans, staking income, and also stablecoin income. So my state currently, I live in Texas, United States. I have the loan product. I'm able to stake my Ethereum, but I don't have stablecoin. So, as again, I'll mention in this video, if you live in a jurisdiction where you don't have all three products, the loan, the staking of the collateral, such as Ethereum, and also the stablecoin interest rates, then I would probably set up an LLC if I were you in a state or a country that has all three products. Again, most of the products are being released first in the United States. So if you live in other countries such as Canada, Australia, New Zealand, the UK, it's fairly easy to open an LLC in the United States if you are a non-US citizen. So again, definitely consult your CPA to see if it's worth it, because maybe the United States tax rates are much higher than your tax rate at your home country. It might not even be worth it to open an LLC in the US. So definitely consult your CPA, your lawyer, whoever, before doing something significant. Okay, so best jurisdiction. And again, for my calculations, we're going to assume a 1-year bear market after the peak and a 2-year bull market. Okay, so to calculate my P&L. Okay, so some price assumptions. Okay, so we're going to assume that we're going to take out a Celsius loan when Ethereum goes up to $20,000. Now, again, how likely is that? That's roughly in my mid-range calculation for Ethereum. If we were to take a look at my profit targets for Ethereum at the end of the bull market cycle, I see Ethereum hitting a mid-range target between $14,500 and $20,000. So I have a slight confidence right in the middle that Ethereum can hit $20,000. Now, our Ethereum buyback price, so let's say we take out a loan at the top at $20,000 Ethereum, we're hoping to buy back Ethereum at $5,000 using our loan. My conservative projected next cycle top. Now, again, the top, I don't really know when it's going to happen, 2025, 2026, 27, 28. It really doesn't matter, but I do believe that Ethereum will hit a valuation of $40,000, which is roughly a $4 trillion market cap. Not even unreasonable if you ask me. Now, again, tax rate is going to be a really big assumption, so definitely get this right if I were you. So definitely consult your CPA to figure out what your tax rate is in your home country, what your effective tax rate is, because the higher this tax rate is, then the more worth it is to take out a Celsius loan. Now again, these variables right here are not as important as tax rates, but we're going to assume that Ethereum staking rate is roughly 5%, Celsius interest rate roughly 8.95%, and stablecoin staking rate is 8%. Okay. Now again, some non-financial factors that might sway your decision making is going to be the super cycle theory. So meaning if we were to slowly just climb up to $20,000, $30,000, $40,000 Ethereum, then taking out a Celsius loan might be worth it because it prevents you from selling your token. So we're going to talk about that later on in this video after I go over the calculations. Okay, let's go ahead and start off with the calculations. Case number one is going to be selling the crypto. Okay, and then this next column here is going to be taking out crypto loans using Celsius. Okay, so let's go ahead and start off with selling crypto. Again, your sell amount is $1 million, and I want to remind you that I'm not going to do this with 100% of your portfolio. So let's just assume that you have a $2 million portfolio and you plan on selling half of it, $1 million. Okay, so you sell half of that portfolio at $1 million, and with the tax rate of 30%, you're gonna have an after-tax profit of $700,000. So your Ethereum equivalent at the bull market top, assuming a $700,000 portfolio, is gonna be 35 Ethereum equivalents. Now at the buyback point, assuming Ethereum goes from $20,000 all the way back down to $5,000, if you were to buy back Ethereum at $5,000 using your $700,000 portfolio, you would get an Ethereum equivalent of roughly 140. So your equity at buyback is 700,000. It makes sense. It hasn't moved yet. And your Ethereum fair market value, once Ethereum reaches the $40,000 mark, is going to be 5.6 million. Okay, so moving on, now let's talk about the P&L, your profit and loss statement between the first bull market top all the way to the next bull market top sometime in 25, 26, 27. But we're going to assume a 2-year bull market. So your $700,000 of stable coins, I'm going to assume you're going to leave that as stable coins USDC. You're going to make roughly 8% on that. So you're going to make $56,000 on that 1 year holding those stable coins. And then once you buy back Ethereum at $5,000 per coin, you're going to have $700,000 where you buy back Ethereum at 5K. In a span of 2 years, assuming an average Ethereum price of roughly 10K, you're going to make roughly $140,000 in a span of 2 years with that $700,000. Again, assuming roughly an average price of Ethereum of 10K. So your total revenue from bull market to the next bull market is going to be $196,000. So your equity at the second bull market top, which is again calculating your equity of your balance sheet at the bull market top of 5.6 plus your revenue of 196K is going to be $5.796 million. Okay, so that's going to be your equity if you decide to sell your portfolio. Now let's take a look at case number 2, which is going to be taking out loans against your crypto. So again, let's assume that you're going to do 50% of your portfolio, meaning $1 million is going to be your permanent stack out of a $2 million portfolio, and the other $1 million you're going to take out a loan against it. So you pledge $1 million of your portfolio, again assuming Ethereum, to Celsius network, and then your LTV is going to be 50%. So you're going to take out a 50% LTV loan. So you're going to receive $500,000 in stable coins. So again, if we calculate our ETH equivalent to the bull market top, it's going to be 50. So if you compare it to selling your crypto, your ETH equivalent is only 35, whereas if you take out a loan, you're at 50. Okay, so the difference is 15. It's a pretty big difference when it comes to the bull market top in terms of Ethereum equivalents. Now let's move on to our balance sheets at different phases of the cycle. Again, at the bull market top, once we bottom, and then the next bull market top sometime in 25, 26, or 27. So let's calculate it at the bull market top. Again, this should make sense. The collateral you pledge is going to be $1 million. Your stable coin that you receive is $500,000. So your total assets, $1.5 million, and your liability, your Celsius loan of $500,000. So your net equity is going to be $1 million. So you can see a difference here. Your equity at the bull market top by taking out a loan is $1 million, whereas your equity at the bull market top by selling your crypto is $700,000 just because you paid taxes. So that's the big difference, is going to be taxes. So next up, our next point of view is going to be the balance sheet at the buyback point. Okay, so again, if Ethereum goes to 20K all the way down to 5K, the amount of collateral you have locked up in Celsius went from $1 million all the way down to $250,000. Now you're probably going to get a margin call with this, but no worries, because we have stable coins at 500,000, which we're going to use it to buy back Ethereum. So once you get the margin call from Celsius network, you're going to go ahead and insert that extra collateral that you have back into Celsius network. So essentially, you have $750,000 in total assets. And your liability, you have your Celsius loan that hasn't changed of $500,000 in liability. So your total equity at the buyback point is going to be $250K. Now let's calculate your balance sheet once we top out at 40K Ethereum later on and in the next cycle. So the amount of Ethereum you have locked up went up to $2 million. That's again taking your $1 million Ethereum from the last cycle, going up 2x to 40K. It's going to be $2 million. That makes sense. Now the stable coins, now let's assume you bought $500,000 worth of Ethereum at 5K, and Ethereum were to go up all the way to $40,000. That would be roughly an 8x. That's going to be an 8x. So your $500,000 turns into $4 million. So your total assets is going to be $6 million. Your liability that hasn't changed, your liability is going to be the $500,000 in Celsius loans. So your equity at the next bull market cycle top is going to be $5.5 million. If you just compare equity of taking out a loan versus selling your crypto, 5.6 here versus 5.5 million here. So you're actually better off selling your crypto according to these calculations here. Now let's take a look at the P&L. P&L is going to be Ethereum, $75,000 worth of revenue for 3 years. That's calculating your $1 million portfolio. Actually, I made a mistake here, guys. Actually, your Ethereum revenue, if you have your collateral locked up, you're actually not making yield in that. So I have to delete that. Let me just update that real quick. Good catch in the middle of a video. So let me just update this. Okay, here's my updated calculation. So in terms of your P&L, your stable coins, assuming you hold a $500,000 in Celsius loans in USDC, you're making 8% on that. So for 1 year, you're going to make 40K. And then the ETH, so let's assume you use the $500,000 in USDC, Ethereum were to go back all the way to 5K and you buy back in, you're going to make roughly $100,000 if you were to hold that for roughly 2 years. Again, assuming an average Ethereum price of 10K. So your total revenue is going to be 140K. And again, interest expense is going to be 8.95% of your $500,000 loan. So over the span of 3 years, you're going to pay $134,250 worth of interest. So your gross margin, $57.50. So you're still a little bit of ahead when it comes to paying off your interest. So the revenue you're making here is negated by your interest expense of your loans. Your equity at the second bull market top, assuming you take out a Celsius loan, is going to be 5.505 million. So based on these calculations here at a 30% tax rate, it is not worth it to take out a Celsius loan. So let's actually calculate what tax rate is going to be the break-even point for Celsius Network. So the break-even point for taking out a Celsius Network loan is going to be 34% tax rate. So meaning if your tax rate is above 34%, you're at break-even, and the higher your tax rate is. So let's say you're in a country like Canada where you're potentially paying up to 50%, or maybe you're in a country like New Zealand where you could be paying up to 39%, then this might be worth it. Again, definitely consult your CPA, consult your lawyer, your tax accountant. Definitely do your own research before considering my strategies that I'm telling you in this video. I am not a CPA, so definitely do your own research. I can't emphasize that enough. So we're going to take this back to 30%, which is again in my personal average tax rates. My personal tax rate is roughly 30% because I have some crypto that are long-term, some that are short-term. So on average, I pay roughly 30%. And also, I'm also assuming that this $700,000 profit after tax is, I'm assuming that your cost basis is really low. So normally you would actually subtract your $1 million minus your cost basis, and that's going to be your taxable income. But in this example here, we're going to assume that you have a really low cost basis where you bought Ethereum at, let's say, $100 per coin or something like that. So your cost basis is really low, basically immaterial. So we're going to assume that. So based on my calculations, you would need roughly a 34% tax rate to break even. So if your tax rate is above that, then just taking out a Celsius loan might be worth it to you. And also, given the fact that there's also a slight chance that we could just slowly trend higher. So let's say you take out a Ethereum loan at 20K, and then Ethereum were to just slowly glide up to 22K, 23K, 24K on a very, very gradual basis, then it'll actually benefit you to take out a loan. Because imagine if you were this person here that sold your crypto. So let's say you sold your crypto at 20K, expecting Ethereum to go back down to 5K, and then it never goes back down to 5K. It just slowly goes up from 2020 to 22 to 23. So eventually you're going to be so worried, why is crypto just going up? I sold at 20, I paid taxes. So you're going to buy back in at a higher price. So you sold at 20K, and then you're going to buy it back at a higher price, plus you paid taxes. So there's always that risk. This person here that took out a crypto loan, again, he or she is going to pay interest rates. So let's see, for 3 years, you know, I mean, you're definitely not going to hold it for 3 years knowing that crypto is slowly going up. So let's say you took out a loan at 20k Ethereum, and then for the next 6 months, Ethereum were to just slowly climb back up, then you can easily close the loan. You can close the loan. You're not going to pay 134k. You might pay 6 of that. So whatever that is. So let's see, 134 divided by 6, assuming you close your loan after 6 months, you're only going to pay 22,375. That's not a bad gig. You're going to pay 22,375, assuming that we enter a super cycle and that Ethereum were to just gradually climb up to 25k, 30k. Whereas this person here paid a really high tax rate of 30%. He paid $300,000 in taxes. Plus, he's going to buy Ethereum at a higher price. So again, do I believe the super cycle theory is possible? Yes, but it's very unlikely. I'm not going to bank on the super cycle theory, but just the fact that it exists and it could happen, you know, there is a rationale why you might consider taking out a Celsius loan. I might actually do this, maybe not 50% of my portfolio. I'm actually planning on doing this maybe 25% of my portfolio. I think that's a fairly good ratio for me on, you know, just to consider the risk that we might enter a super cycle theory. And, you know, I don't want to have to buy Ethereum at a much higher price compared to where I sold it. Plus, I don't really want to have to hold $700,000 in stable coins, you know, given the fact that nowadays we're in a pretty inflationary environment. United States inflation rate is currently 6% from last month, and we could slowly trend higher. So I would be really uncomfortable holding like a USD equivalent forms such as USDC, you know, of $700,000. That's a lot of money to be holding in stable coins in an inflationary environment. I'd rather be in this position where I have loans, you know, where I'm pretty well collateralized. Because just to remind you guys, debt is actually, in an inflationary environment, debt is good. If you believe that we're in an inflationary environment, then having debt is good because inflation will inflate your debt away. So that's going to be a good thing for you. So again, I haven't really figured out the exact numbers, but I might consider doing 25% of my portfolio taking out Celsius backed loans once we peak out sometime next year. All right, again, this calculator is available to my Project Influencers Patreon members, so definitely check that out. I've already given access to all of you that are subscribed to my Patreon. You know, again, you can access this calculator along with many other calculators that I have along, you know, I have this profit taking targets here. You can access all of that in my Project Influencers Patreon folder, so definitely consider being one of my members. I definitely do appreciate it. It does help the growth of my channel. I'm not really making a lot of money on ad revenue, so my Patreon membership from you guys definitely does help out a great deal. Again, if you haven't liked the video already, definitely give me a thumbs up below. Subscribe to my channel if you haven't already. I'm almost at 8,000 subscribers, and hit the notification bell so you get notified when I post my next video. I will see you next time.